Good morning, good afternoon, possibly good late evening. No, Sandra, what is it? 4 a.m. She's not in yet. Good, whatever it is. Happy Friday. Happy Black Friday. You should be seeing my screen. And the chat is open, but it seems like, did anyone have a hard time getting in? I thought I saw Sandra trying to get in and then it's not there. All right. Well, you hear and see, love it. Perfect. I'm just making sure I'm connected to the right microphone. We're going to give it just a minute or two. And then we'll get into today. How was everybody's Thanksgiving? Weigh in. Get it? Weigh in. The smoked turkey was phenomenal. I think at the very end, I maybe went a few more degrees than I wanted. Like, I don't know if I had like a little stall on my thermometer. Anyways, but the breast meat was moist and delicious, smoked, that smoky flavor. Oh, it was good. Hi, Perry. Good to see you. Good to see everybody. All right. Well, I thought I saw Sandra trying to get in and maintain a good weight and eat healthy. Good. Good. All right. Everybody's here. Welcome out, everyone. I think we'll have a few more straggle in, but welcome to the Market Watch Group weekly market wrap. We kicked things 3 hours ahead due to the Black Friday market time change, closing at 1 p.m. Eastern instead of 4 p.m. Eastern. So we are here for the last 45 minutes. It's good to see everybody. I hope you had a great Thanksgiving. Got 2 inches of snow at my house. Winter is kicking into gear. I'm ready for the holiday season to get cracking. Who am I kidding? I've been ready since Halloween. Here's the disclaimers. Here's the agenda. We'll talk about today, short market, light market. And what does it mean to us? We'll revisit our market posture. Did anything change during this short little week of ours? Are we going to have more of the same next week? Is it a pause? I wouldn't be surprised for a pause. What is our mindset for carrying trades over the weekend? Right? What do we have? What do we have going on? What are we looking for next week? Do we have a shopping list? Do we have a list of stocks that we think look tradable? I'm going to say immediately yes. Sandy, hi. I saw you tried to get in earlier. What time is it where you are? And we'll look at the trading plan progress and what we're going to move into as we wrap up this week. I appreciate everybody. I hope I got the message to you. We tried to give plenty advance notice and then like, hey, don't forget, here we are. So hopefully that helped. Let's dive in. Closing out 2 profitable butterflies. I do like butterflies. Don't forget, we've only got, so next week, 3 a.m. using mobile. Got it. Oh, you're a champion. Next week, we have a Trading Foundations, our kind of our final formal session. Case studies. I'm going to kind of walk through start to finish and show you how to do the same kind of a thing, a trade. I'm still kind of deciding what screenshots I'll use and what we'll do using the ThinkBack, which is a very cool tool in the Thinkorswim platform. Okay. So that's Thursday or Tuesday, and then Thursday it's Q&A, and then we move to options, and in options we will talk about spread trading. So when you hear someone say butterfly, you're like, what do you mean butterfly? It's a great trade. It's a time positive trade. It's a trade that benefited, especially if you put it on when the VIX was at 20 and it drops down to a lower number, right? Volatility dropping, time decaying. Typically you want the price to stay somewhat in a range, whether you move the range up or down a little bit. But okay, what do we know? Let me refresh this. Market started flat, moved up, moved down. What are we at now? S&P down 0.01. Dow 0.24 up. NASDAQ 0.17 down. Russell showing a little bit of strength, 0.5% higher. Now, for me, what we saw Wednesday was what I would figure for Friday. So if Wednesday, we had a bullish start, but not a bullish finish on Wednesday. We started bullish, and then it just didn't get it didn't give it back, but it didn't go anywhere either. So at that point, my thought was, okay, probably more of the same. And that's exactly what we're seeing. Just kind of, right, meandering a little bit. Okay, we can live with that. It could move. It didn't move. How does that impact us? How do we then use how do we then adapt our market posture? Certainly, we're going to talk about that. So what's happening? It was flat. Let's look at the internals real quickly. And you can see flat here. Volume was actually bigger than I thought. Today's volume, obviously, it's got 37 minutes, and we're at 20 million. What are we seeing here? This thing's starting to drift lower. Last time we had this, it didn't last long before it popped again. So we have to decide, what do we think it's going to be? A little bit more of a traditional consolidation, and it moves back towards 450. And then we pick some things up. I got to be ready either way. I think it could pull back a little more. I think it could start to go. I think we'll see a window that lasts multiple days, meaning some things might start to turn, and then you might have a whole different sector that's a couple of days behind. Great. That's what breadth gives us. Talking about market breadth and how that has influenced our market posture to improve. The fact that we have strong leaders that we're willing to trade in technology, in communication services, in consumer discretionary, in industrials, in financials. And you'll always hear people like, it's only the big seven, blah, blah. First of all, it's always going to be the big seven first if it goes at all. Right? It's not like the big seven are going to lag and something else is going to pull the whole market, including the big seven with them. Of course not. That doesn't make sense. It defies the laws of physics. The big ones have to pull everybody else. So they're obviously going to lead. That's why we watch them. That's why they're always on our watch list. Right? So don't let that ever dissuade you. I saw an interesting article today on Yahoo Finance. And it said, let's see if I can find it. I can't see it now. Anyway, neither here nor there. OpenAI and Microsoft continue to be big things. And it almost feels as if Microsoft is moving more into the position of Apple's old position. Apple led the whole market for so long with, the just like the technology and the style and the design and just like the cult. But it seems like Microsoft, who is always just a step behind them as a market leader, with its finger in the AI pie, so to speak, really is moving into the forefront of the US company, right? That's what I think. I think it's moving into, that's the one that we're always watching. So we'll talk about that when we see it. Weigh in if you have an opinion. Tell me if you think I'm right or wrong. Okay, so but what it said was, the market, the investors are starting to see signs of market breadth. And I'm thinking, you're 3 weeks late. We started talking about market breadth 3 weeks ago. We're like, well, look at this. We have movement in 5 different places. That's why our posture started to improve. That's what we want. I always want to make sure that whatever I think I see in the Yahoo 3 weeks later. Oh, yeah, you see it now. Great. Okay. Today's VIX, and then we're going to go look at our market posture and just kind of look at what we've seen in this shortened, lessened week. Look at that VIX down at 1270. 1270. Now, the last time we were here, couple of times, sometimes it can just stay down, but oftentimes it can pop. We have to be prepared for that. So if you have bullish trades on and you're preparing for the weekend, what could you do? Now, I've claimed it. It's mine. So I'll say my hedge is 5 weeks out. That would be December 29's, 5% out of the money. From a 455 SPY, that puts us at a 432 put. 5 weeks out, December 29, 432 puts. That's my put. It's standardized, meaning no matter when I first look at it, I'm going to be looking at something pretty within 2 or 3 days of that and within a strike of that. So that if I'm like, wow, these are $3, that is pretty expensive, but I need it anyways. Versus, wow, if anyone has traded those before, this will make sense to you. They're $1.27 today. Maybe even less now, actually. Maybe even less. They are $1.21 right now. That is the cheapest I've seen them. And you're thinking, Scotty, you're just going to buy it just because it's cheap? Hell yes. If I have bullish trades on. So if you have bullish trades on and you are all delta positive right now, you are at risk if the market gaps down over the weekend. You're at risk for that. You're delta positive. So a drop down is going to hurt you. How can you hedge that a little bit so that if things drop, you can start to clean it up and think, but at least I have this happening for me. You buy a put, right? It's going to bring some negative delta to the equation. And it's cheap. $1.21. I almost would do it speculatively just because it's that cheap. So anyway, something to think about if you are carrying bullet, right? Because what we're talking about is also what is your mindset carrying now into the weekend and into next week? We are at a low point that we haven't been below. Does that mean we can't get below? No, I know we can. We just haven't been any lower than we are now since before the pandemic, since prior to March of 2020. So we're coming up on 4 years now, right? Of that. That's pretty crazy. Or 3 years from that. So anyways, no, 4 years. It's great. It looks great. I love a low VIX. You know that. It's bullish. It's confident. But it also has implications where we're thinking, wait a second. A lot of times, even little blips, sometimes it gets big pops. Like here, pop. Here, pop. Blip. Then a pop. The second one will always catch that. That's what we look for. The second one will always catch. I'll catch when it breaks the consolidation. I want you to notice that this does have a consolidation line now that has shown up. Let me draw this as I see it, and then you can decide if you agree or not. That's my consolidation line now, which means if we only pop up to here and then drop, that's bullish as can be. And I'm like, yeah, giddy up. But if we break through that, I might put on a half of a hedge. Because at that point, it's still down here around 13. I'm still going to pay $1.30, $1.40 for those. So I'll put a half of a hedge on. Actually, probably be more like 14. And then if it keeps on going, it's not that big of a deal. I'm just going to hold on to that. Anything below this is a lower high, which overall is still more bullish than not. Right? So will I close that half a hedge pretty quickly? Absolutely, I will. If I get a lower high, it's off the table. I'm not bearish. I'm bullish, but I still will hedge things in the very short term. That is a short-term momentum play, 2 to 5 days. This is not the standard hedge where we're like, hey, I might catch something bigger. So if you have any questions about that, let me know. Otherwise, I'm just gonna pop on with what we're doing today. But remember what we've said before, the more bullish we get, the more we're willing to talk about hedges to make sure we never get into a state of complacency where you're like, oh, it's interesting. So I many years ago, I used to teach, it was a boot camp style class, right? 15 people, 3 days, 8 a.m. to 5 p.m. So we're doing market. We're in the market. And it was funny because I would always ask people, like I do here, temperature check. Hey, how's everybody feeling? Although here we all work together. So I think we all tend to see things very closely, to be fair. But I do like that we bring different perspectives on a subtle basis. But whenever I had a class where everybody was bullish and people are like, oh, I have more bullish trades on than I've had, I literally would go buy puts. For that was an indicator to me. Like, oh, everybody's in. When everybody's in, there's only one place for it to go. Even if it's just a small breathe out, it breathes out. Anyways, it was a hilarious. Me and a bunch of other guys who traded and taught this together would always laugh and talk about it. And we'd tell people, it wasn't like we would laugh and not tell them. I'd be like, hey, just so everybody knows, now that everyone has said this, I'm going to go buy some puts to protect and hedge. It was hilarious. So, okay, let's go on. What else is so what's changed this week? This is where we were. Are we going to give the VIX an extra point? Yeah, we're lower. We're at the lowest. I'm definitely going to give the VIX a quarter of a point for what it's done this week. Yes. Let's go back to the SPY real quickly. It's quiet out there today. I need interaction. I need you guys to weigh in. What are you trading? What are you doing? What are you thinking of doing? SPY. So this is where we were and we popped up. I don't know. I'm on the fence. Did we break? Did we get a new high or did we just get right to where this was? I may or may not. That's on the fence for me for the short term. This is a good chance. Would you give it an extra quarter point as of now or would you leave it as is? I'm leaning to as is, but we'll see. This is going to stay the same. We're right where we were, always in our trend. Absolutely. From a volume standpoint, let's just ease up. Remember what I said on volume. You might think, oh yeah, there's no above average volume days this week, Scott, so there's no way you're going to adjust the score. Except you're forgetting that what we gain over here, we lose over here. So at this point, if you remember, at one point we had 6-7 bullish days and one bear. Our volume score got to a minus 0.75 at one point. It was like the worst reacting thing. But now this is all that's left. These are the last 2 days, here and here. This one red candle here that had below average volume. So at this point, we have two selling candles. And we have 1, 2, 3 buying candles. Nothing new, but we don't necessarily need something new as we shift. But 3 to 2, that's definitely at least a quarter of a point, possibly even a half of a point. What were we? We were 0. So I think we're going to get a quarter of a point here and a quarter of a point here. No, not a quarter of a point here and a quarter of a point here. I think I'm going to go at least to a 3.75, maybe to a 4. We'll see what happens. I like to just kind of think about it. Why do I do that? Because it helps decide what you're going to do with trades you're in now. So if you're in bullish trades and you're like, well, we're hitting resistance. We are. But we've been hitting resistance and going higher this whole time. So should you consider carrying bullish trades? Of course you should. If you're in trades that are making money, especially if you've already taken some profits at a good point. That's what gives you the ability to let your profits run right now. And if you looked at the market posture and things pulled back a little bit, and you're like, ooh, you know what? I'm dropping from a 3.25 to a 2.75, I think. Great. That's giving you an early look to what's coming. So what do? You take your profits and you shut it down. But when your score improves, you're like, hey, you know what? I think I'm going to carry some of these through to next week. I hope that makes sense. It's one of those subtle things where it's like, it's not just a posture for the week. We look at it and then we look at it again on Wednesday and then we look at it again on Friday and then we reassess it on Sunday. It's fluid, like the market. It's dynamic. We don't necessarily change our score, but as we start looking at what's coming, it allows us to then make better decisions as we come into the weekend. Did I say you don't need volume under certain conditions? As our market posture, so some of you who were here back in June and July, we didn't have a lot of like positive volume. Volume was scored a lot of times neutral. And we would and so we didn't need volume, because as long-term and short-term trend scores improve, as you have trend on your side, you don't need volume. Volume is when there's a big tug of war and you have breakouts and you have shifts and transitions. When you break support or break resistance, you need volume. So as we were breaking out, we did get some volume and we needed it. But now as the sellers have disappeared, you don't need big volume to counter a lack of sellers. And that's what we're seeing, is a lack of sellers. So that's where I say, as our score improves, the volume might go to a 0.25, 0.5, and then drift back down to 0. And as it drifts back down to 0, our trend scores are going to 1, 1.25. And so those are improving. It's an interesting thing to watch, right? And as I've watched it over the past 12, 15 years, this process for me has been somewhat the same. I mean, very subtle changes, but watching as one thing improves and another thing sort of just goes more neutral. And that's why when we see a quick shift where the Dow shifts up or shoots higher and the NASDAQ and the Russell drops, you're like, whoa, that was out of, all of a sudden there's this defensiveness and you're like, I'm hedging that. If I'm wrong, I'll take it off 5 days later. They're probably cheap, right? That's what I mean. We're just always kind of watching those subtle signs where a lot of traders, investors aren't going to see it. They're just sort of watching the trends, and that's great. We do that too, but we're always watching for something subtle that just sort of says, is there a shift? Okay, that's the market posture. Mindset for trades. We sort of addressed that. If you have bearish trades, this is what you should be asking yourself. What's the cause of those? They're probably just stretching against you, because it's like, I'm at resistance, it might drop, and then it goes a little higher. And then you're at resistance and it might drop, and then it goes a little higher. We would much rather be on the bullish side of that, where we take some profits and then we're just like, great, let's see if this thing just keeps inching higher. Now, hopefully you got them pretty cheap here, because the one thing we don't want is for the time and volatility to bleed off what you're gaining. So if it's a slow move up, you're going to start to find where all of a sudden you're like, the market's moving higher, but I'm not making any more money. What's happening? What you're gaining from delta is being offset from theta and vega, right? You're gaining from the stock moving in your direction, but you're losing from time and you're losing from volatility. That's where a trade like a butterfly would gain from time and gain from volatility. And that's some of the subtle things and some of the things what we'll talk about as we get into the back end. We're still going to start with the basics, but as we get to sessions like 6, 7, and 8 in the options foundation, we are going to touch on spread trading most definitely. Okay, so yeah, bullish. If you have something bearish, and you're thinking, oh, maybe it'll drop by then, you're now on hope. And remember, hope is when we're making money. Fear. I want fear when I'm losing money. Right? And oftentimes it's the exact opposite. When we're making money, we're like, oh, the market's going to take it from me if I don't take it now. That's fear. I don't want fear. I want hope. I hope it keeps going. Let's give it a chance. And then we'll catch times like this, where it just sort of keeps on grinding a little higher, versus hope and fear on the downside, right? We should fear that a little loss is going to get to a medium-sized loss, and a medium-sized loss is going to get to a large loss. We should fear that our loss is going to exceed our maximum risk for a given trade. I don't even want it to get, if I'm willing to lose 500, as it gets close to 4, I'm thinking, what are you doing, man? You better be ready to close this thing down, right? Like we really have to be good at cutting losses short. Okay, that's the mindset for carrying trades. What are we looking for next week? Let's look at the economic news, and then we'll look at our watch list, because there's good stuff. I mean, are we looking to take trades today? No, I don't see anything, right? Other than the hedge. If you're going to put a hedge on, it's a beautiful time when you don't think you need it. When everything looks good and you can buy it for $1.21. Actually, it's $1.19 right now. Am I watching it on another screen? I'm not going to confirm or deny that. Yes, it's on the other screen. Okay, let's let's take a look now. Where's my economic calendar? Nope, that's not it. That's not it. It's this one here. Let's look at today's heat map for just a second. Sorry, looks like I have Black Friday internet. What's going on? You can see the big seven. Tesla's looking all right, but the rest of these guys, Apple, Microsoft, NVIDIA, Google, Meta, they're starting to pull back. Everything else is moving up. What would people read that as? I don't know. I think that if these guys pull back for a few days, everything else is going to kind of come with them. Looks good to me. I would like to trade Apple. I would like to trade NVIDIA and Google and Meta. I'd like to trade a lot of these things. All they got to do is consolidate for me, and I'm ready to go. So I think this looks fairly positive. Fed Watch tool. All of a sudden, we've got this 5% outlier that there may be a Fed hike. It's not huge. Still 19-1 that it's going to remain unchanged going into the end of the year. That's the market that we have. Let's take a look at this. Okay, next week. Next week we have new home sales, nothing there for us. Tuesday, consumer confidence. That's something that we're going to be looking at for sure. Wednesday, we'll get a quick peek at the GDP, which came in very strong. We'd like to see that maintain. A little bit of Fed potential there. I think people are just looking to confirm what they already believe, which is that they're done. Then the one thing that could potentially shake things up, PCE, we're going to be watching particularly this number here, PCE year over year, 3.4. Obviously, the closer it is to the twos, the better it is, and the more it confirms the Fed not hiking. Now, the second they don't hike, it's going to be, when are they going to cut? I promise you. If you think that we're done with the Fed, we're not. Okay. Let's look at our watch list. Let me get this back to 6 months. And we'll start back at the top with Apple. Yeah, looks great. We've been waiting for it to give us some kind of actual consolidation. At this point, it's definitely happening. So as we come out of this, wherever it comes out of this, and the buyers come back in, I'm definitely going to be looking to be there. Adobe. I mean, it's kind of crossing on the stochastics. I want to point out that this is the weakness of an oscillator. Stochastics, MACD, RSI, CCI, the awesome oscillator, anything like that with that moves in a 0 to 100 or minus 100 to 100, up and down, overbought, oversold. They work great in sideways markets. They can function well in trending markets, but high momentum markets, they are going to just lead you along like it's overbought. It's not, is it? I mean, we have to recognize that in order for us to have an accurate interpretation, we really need to remember it's a momentum indicator. So when it goes from here at this bottom and starts moving up, momentum is increasing. When it's up here, even if it turns over, if it's high and stays high, momentum is staying high, right? The buyers are staying in control, and they can't. I've seen it stay there for 3 months, 4 months at a time. And if you're like, oh, it's overbought, so I can't buy it, we just have to figure out how are we going to do it. Adobe, I would still like to wait. Now we've been patient with Apple, and Apple's coming back. So we should see that. Insurance is strong. You had an opportunity. I would imagine some of you have traded somewhere in here. AFL, AIG, PGR. They're all very similar in scope. Not trades now, though, but would you carry these through? Yes, I am. So AIG, where was I? AMD overbought still. I don't like this consolidation. This little pop up. I still think there's more down. I need a true consolidation or this is going to be too hard to trade. Luckily, Intel and NVIDIA both look strong as candidates from the semiconductor realm. Amazon, same thing. Can't do it right now. I need to see a consolidation. APH, can't do it. Need a consolidation. Same thing here with AXP. Same thing with Boeing. They look great though, right? These are some phenomenal looking high momentum stocks. The train is running. It's dangerous to just jump on it. We'd like to see it slow down a little bit, give us a chance, right? If you ever do just jump on, remember the Heiken Ashi are a phenomenal way to go. But we're just thinking one of these is coming our way. And when it does and turns, we're going to catch it again. Love the Heiken Ashi. Great. Remember this. Candles are price action. Candlestick patterns are now an indicator, meaning you're applying some kind of a formula to it. Heiken Ashi is an indicator. They are calculated candles. There is a formula being applied that then creates that visual. These are just price, open, high, low, close. As we start assigning things like dojis and stuff, then we start to give them quasi indicators. And then when you need confirmation, they become indicators. So just think about that in your technical analysis. BK financials overbought, just need a pullback, just that pullback. Same thing here on BX. Citigroup has kind of started. I'm looking at this one as the most advanced. Look at this. That's exactly the same type of a consolidation. So I'm starting to think if I break into this area, I'm going to buy that break. So there I do I need volume? No, look at this volume just drop off here. This is the selling cycle and look at the volume. What does that tell you about the sellers here? So the buyers could just come overwhelming this thing at any given time. If you're going to be ready, you got to be ready. What is the trade you're going to do? What exactly do you need to see? Would I like to see this thing pull back and then stabilize and then turn? Yeah, I love that. That's my most favorite pattern. Is it going to? Who knows? We'll watch it, but yeah, I'm ready on something like Citi. This thing looks like it's poised, ready to go. But a lot of these are attractive. It's just, what do they need to do for you to say that meets my rules? That's my trade. Let's clear this. Questions, comments, concerns? Let me know. We'll keep going. Capital One, same kind of a thing. I don't know. That could turn. It's a little pause. It could pop out of it. Could break out of it. COP, oil and energy stocks, still not much there. Costco, that's a nice looking one right through here. Yes. Anybody trade this? Did we talk about this one? I can't remember if we did or not. Copart starting to consolidate. This thing is a shark frenzy. I would love to catch another one of these things. Right? Absolutely. Sometimes you might think, is this thing even have the ability to go higher? Look at that trend. Beautiful trend. Absolutely, I think it can go higher. Spectacular. What a strong stock. Okay. So yeah, am I ready with that one? That's definitely a strong one on the list. CrowdStrike, no. At resistance, too close to resistance. Dell, anyone play this? There was a little money there. Break even, maybe a slight gain. Buy yourself lunch. Now it just runs out of steam. You've got earnings. I don't know. Every time I think Dell looks like it has something, it just falls apart. Press, you traded Dell. How did it go for you? Did you squeeze something out of it? There wasn't a lot there. Not a lot of meat on the bones on that. Good signal. It's just like sort of got disappointing. I don't know. You could even still looks like it has a chance for momentum, but you got to carry through the weekend. I don't know. Let me know what you're doing with it. DHI. This looks good. The home builders have been strong. A little bit of a consolidation. Could you trade the turn? Absolutely. On the list. The Dow's moving up a little bit. This is a little bit overbought. I need something more. We look at gold. I don't really trade gold. Google's coming. Come on back, Google. I would love to trade Google. This little gap right here to me is a great point where you might find a support. On top of that, maybe around 133.5. Anything above that, that's a go. Green means go. GPS, it needs to pull back. So does HD. These consumer discretionary are strong, but they're definitely more pushing that upper resistance level, right? IBM pushing resistance. I need a pullback. ICE, nothing there. Intel, Intel, look at you. Broke even through this little fib extension. Popped up here, pulling back, maybe gonna settle somewhere in this area. Bullish on Intel, absolutely. Who's with me? Looks great. Chips and AI are, I think it's gonna be, there's a lot there. There is a lot there. I got my mother-in-law all riled up. She's a bit religious. And she's like, "Oh, computer's taking over." I'm like, "Oh, I welcome it." I would look at the politicians we have on both sides. I welcome AI. ChatGPT is my spiritual advisor. That's what I told her. Oh, love it. I do think it's going to be an enormous thing. It's everywhere. It's already everywhere. I mean, if you look at every time you're on a website, you're never talking to a person. You're talking to AI, right? Like it's just, and it's good. It's helpful, right? It lets small businesses provide better service because they can just pay for a little subscription and bam, there's someone helping. It's fabulous, man. How are we against it? It's amazing stuff. Okay, that's my soapbox. IWM looks like it could turn. That's on my list. Small caps. We said we're starting to see a little bit of that. That last bullish dimension is the small caps moving into a leading position, giving us that full appetite for risk. Fantastic. Okay. JP Morgan overextended though, right? We like it, but it's overextended. A lot of these financials are. Meta possibly coming back to let us buy it. Microsoft. We would love for Microsoft to pull back. Microsoft is now the market leader for me, period. Netflix, overextended. NVIDIA. Oh, look at NVIDIA with Intel. I'd trade both of them. I would. I like them both. I would take them both. I think chips are strong. I think chips will be a big part of that. I think it's starting to move again. And there was a little weirdness in the industry with like the whole OpenAI and the board and their main guy, and Microsoft owns 49% of OpenAI. So interesting drama playing out. I guarantee they'll write a book about it. I guarantee it. Things like that can make they'll probably have a movie about it at some point. PDD overextended. PGR signal is last, either Friday or Monday. PLTR. Hello, PLTR. Oh, right? That looks fantastic. It's right knocking on the door. I think that one's ready for us early next week. All systems are go on the list. We've got some really strong things setting up. Patience, perseverance, readiness. PNC, look at you. There's a nice financial, kind of sitting in that like large regional, not quite national bank, but it's a real strong. This thing has an ability to shoot on up to 137. Beautiful. Can I risk 3 to make 9? Looks pretty good to me. QQQ, overextended. Remember that, are we more inclined to anticipate? I am. I don't know about you guys. My posture improving says now. Back 3 weeks ago during September, October, someone's like, "Are you going to anticipate?" No, hell no. No way. Waiting for confirmation. Now, if I have one piece of confirmation, I'll be like, "Let's go." Price is moving. I'm moving. I'll wait. I'll assume stochastics will go with me the next day. I want that day. RCL looks like it's in its consolidation mode now, but cruises have been strong from the consumer discretionary. People are like, yeah, that's the travel they want. Starbucks, it's got to go soon now. Now it's been 5 days. Now it's been a little bit more of a pullback where we're like, okay, the volume is light. It has been for 3 days, but we need buyers, right? Like if we get them on Monday, Tuesday, this is definitely consumer discretionary, good spot. We like that. Shopify overextended. SMCI in the AI space, super microcomputer, that looks good. Upside down on Starbucks. A little early on that one, maybe. It's hard because it looks like it wants to go. I'm bullish on Starbucks, just waiting for that signal. SPY just kind of flat today. Tesla looks ready. It looks like, the consolidation, the sellers aren't doing much. If we turn out of this, then that's another one in the consumer discretionary space. UBS, financials overbought. UNP, industrials overbought. Visa overbought. The VIX is down at 12.5. Those 3 minutes left. Those puts are at $1.19. $1.19. WMB, I said this was my favorite one, but I didn't take it. I didn't like anything energy. Did work. We were right that this one is keeping its strength. Walmart, it looks like it could try to bounce off of this, but you're bouncing off of a pretty low. I'm not really into that type of a trade. When people are like, well, doesn't it look like it's going to bounce off support? Yeah, but I mean, it might not get above 158. It's at 156 now. Energy still kind of lulling. Financials still look a little overbought, as do industrials. But and they look strong though. Staples and utilities are moving, just less so. They also look a little bit overextended. The whole market certainly looks like a consolidation is still in order, but we do have trades. They're setting up. Everything looks pretty good. That's my story, and I'm sticking to it. Okay, here's the trading plan. Remember, right now we are working on, where are you? Trading plan. We are working on section 4, all about risk. Do you have your portfolio heat defined? Is it fluid? Does it change with the market? How so? Trade risk. Do you know what risk you're taking on any given trade? I have hedges. I have half hedges. I have spread trades that I take higher risk, and I have long options where I take less risk. There are definitely things I do differently among systems and strategies. How many trades? You might say to yourself, I have some people like, I can't manage more than 5. I get anxious. Great. All of this needs to work together. This is a check and balance system, these 3. How are you going to make adjustments to risk, both through the trifecta here, and how are you going to make risk adjustments intra-trade? It's not just, right? We have different ways that we look at how we make a risk adjustments. How are you correlating everything to your current market posture? What indicators are you using for hedging? I use the VIX. I use intermarket analysis, the major market analysis, a little bit of sector rotation. Those are the things that I focus on. There's 4 or 5 signals throughout those indicators that will help me to say, hey, something's breaking out of this nice little happy-go-lucky market we're in. We know that the jungle could be right around the corner at any given time. Also, have you defined when you're going to take a break, when you're going to stop and say, okay, I can't just keep thinking I'm going to trade through this. If I draw down 10%, if I draw down 15, don't go much more than that. The more you lose, the harder it is to recover, right? If I lose, now don't say like, if I lose 3 trades in a row, come on, 3 trades, 7, 8, I don't know, something like that. This is mine. I put that there because that's 9 out of 10 times I'm out of my flow. I'm like, I'm impatient. I'm frustrated by something. I'm forcing, right? You learn to recognize your own conditions so that you're like, oh, come on, bro. The chimp is at the computer, right? The chimp is at the computer. So we want to make sure we are well aware of who is running the show. All right. Well, friends, it's time to go shopping. My daughter, and she's like, you better come out as soon as you're done. As soon as the market closes, I'm going to go get dressed and join the family for some Black Friday shopping and lunch. I hope you have plans for this weekend. We will be back on Sunday morning. Sunday morning. Sunday morning, 11 a.m. Eastern, 9 a.m. for me, 8 a.m. for press. You guys enjoy it. I'll see you in a couple of days. As always, happy trading.